Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thanks for joining us. This E-News might sound like a bit like a broken record because there's not a whole lot of new info out there, but we thought we'd give you a quick update as we are 20 days away from the election. Last week we got inflation at both the consumer level in CPI and the wholesale level in PPI, Producer Price Index. And while the consumer level inflation was a little bit higher than expected, the wholesale inflation was a little bit lower than expected. So on the whole, inflation continues to come down and get closer to the Fed's target rate of 2%. Josh and I are very suspicious if they really think that they're going to get it back down to 2% anytime soon. But I think it's close enough that they're quite comfortable with the level that it's at and it's headed in the right direction. So that was good news for markets that inflation continues to move in the right direction. The other thing that's more important long-term for markets and stock prices is earnings. Earnings season has started, and for the most part, earnings have been quite good, especially the big banks reported, and almost all of them had good numbers. So earnings is actually what drives stock prices over the long term, and earnings continue to grow. And so, of course, there's going to be a candidate that's challenging for the presidency that's always going to tell you how awful things are, but in reality, when you look at the U.S. economy, it's doing quite well, and so we believe it's going to continue to do quite well in the days and months ahead. But, you know, as Josh can tell you, we are headed into an election where half of you are going to be quite unhappy about it, and that's going to probably create some volatility.
Yeah, roughly 21 days from now, we're hoping that we all wake up on November 6th and we have a definitive winner of the election. And the only thing that we can really guarantee is that half our client base is going to be angry and upset. The one thing we're here to remind you of is earnings and interest rates are ultimately what drives stocks, and fourth quarter earnings season is no way going to be affected by the presidential election, no matter what the outcome. And so remember that when you get when some of you out there are angry in a few weeks. But more importantly, what we've seen over the last few weeks is an expansion of what's working within our asset allocation. Large cap stocks are down today. Everything else is up and significantly higher, up over 1% today. So breadth, more stocks doing well is exactly what we want to see in a bull market, and that's precisely what's happening. So remember, the outcome of the election is not going to affect the ability of companies to make money. We're all going to wake up on November 6th, and those of us that are working are still going to go into work, and those of us that spend most of our time buying stuff are still going to be buying stuff. So we're here to remind you of that.
Yeah, the election is certainly going to cause some volatility, but remember, investing is not a binary decision. We've had lots of crazy, what people think of as crazy presidents in the past. We'll have a bunch in the future, but the good news is our system historically has worked, and we think it's going to work again this time. So as always, if you have questions about your situation or your account, you can call us at the office 800-743-0988 or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.